Bring in Alan Nuttman, Chief Market Strategist at BullseyeOption.com, not a meme stock trader. So you're not too hyped about AMC, Alan?
Well, I'll trade anything. I'll trade anything anytime as long as it's got liquidity. I can execute my trading plan, get in when I want, out when I want. And so, yeah, I'm an options trader. I'll dabble in the AMC once in a while when it has good risk reward. So what I want to talk about is I missed you last Monday, and Mondays are my favorite days. I loved what I saw last Monday. Made new relative lows and a higher close, and then we built on it with that relief rally on Wednesday. But, you know, we all know what happened after that.
Right. Rest is history. We get blasted, and now this morning VIX is at 33. But at least bonds are rallying today. Is there some semblance of stability here, Alan?
Well, that's what I'm saying. It's very interesting. We're making new lows again, but the VIX is nowhere close to that 38 high. So again, this is a bullish divergence example. It just, the psychology has shifted. It's so negative. If you look at the fundamentals, all right, 90% of earnings are in for the quarter. 80% S&P companies beat, and 75 beat on revenue as well. And 6 weeks ago, we were expecting earnings growth of 4.5%. We came in with 9%, so we're double what we were looking for. The PE ratio on the S&P is now 17. It's below the 5-year average, and we're pressing on the 10-year average of 16.9. Two more things. Revenue growth is 13%, and profit margin is 12%, which is above a 5-year high. So a lot of positives, except for price.
Okay. But you're not trading the index this morning. You're trading, by the way, a very fun and nice setup for our next conversation, too. CCJ, the much-watched uranium play. So the market looks so good. How come you're not buying SPY calls, Alan?
That would be too easy. That's not the game to play, because even if you buy, the volatility is really high. And once they suck that volatility out of it, and we get back down to the 20 vol where we were just a couple weeks ago, then a lot of that is gone. So a smarter play for me is looking at, I'm a commodities guy. Uranium is a commodity now, and it had a huge run-up. It's down 30% off its April top. Less than a month ago, it was 30% higher, but it's up 150% from its COVID lows. So it's still very, very strong. It's trading between 17.5 and 27.5 mostly for the last 8 months. So this 2250 midpoint is an area to keep an eye on it right now.
I will say that it's been a very reliable trend. By the way, this might be kind of a meme stock in a way. I know a lot of people like to trade in this as a speculative playground. Right. Volatility pretty pumped up when you're trading CCJ. I mean, not extreme, but even the weeklies here are at 80, 90, 82 the next couple of weeks. So this is not totally for the faint of heart. This puppy can move.
Right, and that's why I'm looking at the in-the-money option, all right? So I have real value. I'm looking at the 20 call. And the September option, September 20 call is only $50 more than July, and you're getting twice as much time. So I got 4 months of time. A lot can happen in 4 months, because it lets me think here, what was 4 months ago? Oh, I don't know, the all-time forever high in the S&P. So this option's got a 70 delta, 4 months of time, it's in the money, so it's going to behave pretty well. Now, you talked about that volatility high, and that volatility high only impacts the extrinsic value of the options if we want to take it a little deeper. So, you know, that's where you have to pay the piper. But right now, I like this to see how the markets respond over the next weeks and months.
Okay. So CCJ buying the upside call, in the money already after the sell-off here today, down about almost 7%. Yeah. Okay. And hopeful and optimistic on the market, but not a big fan of the technical situation at the moment, not ready to stab at the SPY.
It looked great last week. It looked absolutely textbook.
For a minute.
The lows, we had a higher close, we had the relief rally on the rates, and then it's unglued. The sentiment now is just sell every rally. Until that changes, unfortunately, this is where we are. But in the big picture, if you look, we have been trading sideways. Let me say it again, sideways from 4,800 to 4,100 for a handful of months. So yes, we're at the bottom end of the range. Let's see what happens.
Okay, I mean, hey, new year-to-date low. We're kind of taking out that range here. You got to go back to spring last year, but I hear it. We tried to hold on. Then unglued. Right. I like that description. Unglued we came on Friday. Thanks, Alan. Appreciate it.
Hey.
Mr. Youngman is the Chief Market Strategist at BullseyeOption.com. In the money calls on CCJ, the uranium play. Speaking of new energy, We got the president and CEO of Plug Power coming up next after a deal to bring the energy to the forklifts at Walmart, the way I understand it. That being said, market not impressed. Apparently, Plug's down 9%, trading of 1760, near the lowest we've seen in the past year. A stock that's down 77% off the highs. We'll be right back.